Listen up, PI holders, a massive unlock of tokens is just around the corner. Could this trigger a price crash, or will a hidden mechanism save the day? Let's break it down right now. What's going on, my pie-loving prospectors and crypto market analysts? Welcome back to Gold Rush Crypto Daily, your inside source for all the latest developments in the Pi network and the wider crypto universe. I'm your guide, Goldrush, and today we're diving into a potentially market-moving event for PiCoin. In this video, we're going to be talking about the upcoming unlock of over 23 million Pi tokens on March 21st. We'll explore the potential impact this could have on the price and whether Pi Network's hidden token burn mechanisms can prevent a significant downturn. Plus, we'll look at key price levels to watch for a potential rebound. You absolutely need to see this to understand what might be coming next for your PI holdings. Alright, let's get straight to the point. There's a significant event on the horizon for Pi Network that could definitely inject some volatility into the price. We're talking about a scheduled unlock of a whopping 23.4 million PI tokens on March 21st. That's a substantial amount of supply, potentially hitting the market all at once. And as we know in the world of crypto, an increase in supply can often lead to downward pressure on the price. This isn't happening in isolation either. Just a few days prior, on March 17th, another 23.1 million PI tokens were unlocked. And if we look at the recent price action, according to CoinMarketCap, PiCoin has already experienced a nearly 23% decline in the past week, currently trading around $1.15. While this drop could be attributed to various external factors like global economic jitters, these large token unlocks are definitely a significant internal factor to consider. When millions of tokens become available, there's a possibility that some holders will choose to sell, increasing the selling pressure and potentially driving the price down further. These large unlocks are always a bit of a tightrope walk for crypto projects. On one hand, they're part of the planned distribution. On the other hand, the sudden influx of supply can definitely spook the market in the short term. Now, here's where things get interesting and potentially offer a glimmer of hope for the bulls. Even though the Pi Network team hasn't officially announced any large-scale token burn events, there are indications that the network has built-in mechanisms that contribute to reducing the circulating supply over time. Think of it as a stealthy, ongoing burn. One key mechanism is the network's transaction fees. Every time a Pi transaction occurs, those fees are permanently removed from circulation. They're essentially burned. This is a continuous process designed to gradually reduce the overall supply and combat inflation. Furthermore, another group of PI tokens that are very likely being burned are those belonging to accounts that failed to complete the crucial KYC or Know Your Customer verification process within the grace period. Remember, KYC was mandatory to transfer Pi tokens to the mainnet, which launched back on February 20th. Users who missed the December 30th, 2024 deadline for KYC had their mined PI potentially burned. This has already led to a reduction in the total supply, which now stands at around 6.99 billion, down from before the mainnet transition. These hidden burn mechanisms are actually quite smart. They create a natural deflationary pressure on the token supply without the need for dramatic, announced burn events. It's like a slow and steady way to potentially increase scarcity over time. Some eagle-eyed members of the Pi community have been analyzing the network data to try and estimate the rate at which these tokens are being burned. Based on their findings, it's estimated that around 528,671 PI tokens had been burned by early March. This data suggests a daily burn rate of somewhere between 3,000 to 4,000 tokens. While this might seem small compared to the upcoming 23 million unlock, remember that this is an ongoing process that will continue to chip away at the total supply over the long term. So, the big question is, will this continuous burn, along with the tokens already burned from unverified accounts, be enough to counteract the potential downward pressure from the upcoming token unlock? That's the million-dollar question, and honestly it's tough to say for sure. It will likely depend on the overall market sentiment and the reaction of Pi holders to the unlock. Now let's talk about some key price levels that could indicate a potential reversal of this recent bearish trend. According to technical analysis, Pi coin needs to hold above the $1.05 support level to have a chance at reclaiming bullish momentum. Additionally, breaking through the $1.37 resistance level would be a significant positive signal for further price increases. There's also a major psychological support level around $1.10, which could act as a springboard for a trend reversal. If the bulls can manage to push the price above $1.50 and eventually even $2, that would be a strong indication that the bearish pressure is subsiding. Keeping a close eye on these levels is crucial for anyone holding or considering buying Pi. Breaking below the support could signal further downside, while breaking above the resistance could indicate a potential recovery. Looking at the bigger picture, the long-term value of Pi coin will ultimately depend on a few key factors. Sustaining those crucial support levels and, more importantly, driving real-world adoption are paramount. The article mentions that Pi's adoption has been skyrocketing, particularly in places like China, with reports of restaurants and retail businesses accepting Pi as payment. This kind of real-world utility is incredibly important for the long-term health and growth of any cryptocurrency, as it creates genuine demand and can help to offset inflationary pressures from events like token unlocks. Furthermore, if the network continues to effectively reduce the supply through these hidden burn mechanisms, that deflationary pressure could significantly strengthen Pi's long-term value proposition. This is a critical time for Pi Network Crypto Fam. What are your predictions for the price action after this upcoming unlock? Let me know your thoughts in the comments below. And if you're finding this in-depth analysis helpful, make sure to smash that like button. If you haven't subscribed to Goldrush Crypto Daily yet, hit that button and ring the notification bell so you don't miss any of our future market updates. So, we have this upcoming wave of unlocked tokens that could potentially push the price down. But on the other hand, we have these ongoing, albeit hidden, burn mechanisms that are slowly but surely reducing the overall supply. It's a bit of a balancing act, and the market's reaction to the March 21st unlock will be a key indicator of which force is currently stronger. Keep a close eye on those support and resistance levels we talked about, and remember that overall market sentiment can also play a significant role. Imagine if the unlock is met with strong buying pressure from the community and new investors who believe in Pi's long-term potential. That could completely negate the potential for a price crash and even trigger a significant bounce back. What's your take on this upcoming Pi token unlock and the potential impact of the burn mechanisms? Are you feeling bullish, bearish, or somewhere in between? Let's get the conversation started in the comments below. If you found this important update and analysis valuable, please give this video a thumbs up. Subscribe to Gold Rush Crypto Daily for more timely crypto insights and hit that notification bell. Thank you all for tuning in and staying informed with Gold Rush Crypto Daily. Be sure to check out our other videos for more in-depth crypto analysis and market updates. And finally, a very important reminder. I'm just sharing my analysis of the market and potential future events. This is not financial advice. Please do your own thorough research before making any investment decisions in the volatile world of cryptocurrency. Stay safe out there, Pi pioneers.